Well, I think whether the Bank of Canada cuts or not, I think that's the $1 million question. And a lot of investors put in a significant amount of work to try and figure that out. The short answer is that the Bank of Canada will do what they will do. We talked previously about how difficult it is to try and figure out what central banks will do. They have different mandates, and certainly with the Bank of Canada, the mandate of 2% inflation is something that they've reached, and therefore difficult to understand whether they will or they won't cut. So these macro uncertainties of trying to figure that out and where investors sort of fall lead us to find some micro opportunities, which we then can put our full force of a research behind to try and uncover. So I think that's where we will spend the vast majority of our time, is try to uncover those micro opportunities that have been brought about by these macro uncertainties. Unlike the situation where you're trying to figure out a low probability event of whether the Bank of Canada will cut or not, we think there's more value in looking at idiosyncratic situations where we can utilize and leverage our research process and philosophy to uncover great opportunities. I think one of the things that we've done very well, for example, recently, is using Sacket's work on a US utility called PCG to buy their bonds. And that's been, from a risk-reward perspective, much better in terms of highlighting what the value add in a fixed income portfolio, because buying those bonds has returned about 20% over the past, has returned about 20% year to date, while trying to figure out what the Bank of Canada will do is a much more difficult call to make. Continuing with the PCG example that we talked about, it was Sackett, obviously, who uncovered PCG from an equity point of view. But as we started talking and understanding more about the utility and the opportunities that it provided, after all, this was a company that was going to go through a Chapter 11 proceeding, which doesn't always bode well in terms of coming out the other side. But our research showed us that when we looked at the company, that actually it was in their best interest and the company's best interest to actually go through these proceedings, and the market was misinterpreting what that meant from a fixed income point of view. So not only did we use that from the equity perspective and have the equity in the US pool, but we were able to leverage that and actually buy the bonds in the diversified fixed income pool as well, to take advantage of what we thought was a great opportunity.